The World Economic Forum in Davos, Switzerland is an annual gathering of world leaders where they discuss and undertake to find solutions to some of the most pressing matters affecting the growth of global trade. The theme for the 54th annual meeting this year is Rebuilding Trust, a theme that strongly resonates with many governments and international stakeholders. Trust affects the ways countries trade, and it impacts how funding will be allocated. Without trust, private and public sectors cannot collaborate to create conducive conditions to improve economic development and growth.
Trust is fundamental. It goes to the heart of economic activity. And the most important element of trust and economic activity is the ability for you to know that when your counterpart makes a commitment, they will meet their obligations as they fall due. So it's fundamental to banking, it's fundamental to business. Now, what I've just described, I would offer to you, is the essence of what institutions are about, whether it be business, universities, organs of civil society, government, multilaterals, and the global network. So the issue of trust in these discussions goes to the root of the relationship between the various players in civil society, in business, local organizations and multilateral.
If we extend the question around rebuilding trust to the rest of the continent, just your engagements with some of the ministers from the rest of Africa, and if you had to have an intervention on how best to perhaps strengthen the partnership and trust between government and business on the continent, what would that be?
There are many issues there, Fifi, but for me the main one would be how do we as Africans make an impact on the perception risk premium associated with the African continent. And it's basic things. It's one, reduce the size of the informal economy. Secondly, liberalize these economies. Thirdly, make it easier for goods, people and ideas to move between the continent. Fourthly, in particular, reduce non-tariff barriers at borders. And in essence, implement the Africa Free Trade Area and do so as quickly as possible, because the opportunities arising from it and the benefit to be derived by Africans are vast.
The vast opportunities of the AfCFTA are estimated by the World Bank to increase Africa's income by $450 billion by 2035 and increase intra-African exports by more than 81%. Trade relationships between countries remain key to keeping economies flowing, whether it be trade in goods or services. One aspect of trade that was debated and essentially agreed upon is that services should be frictionless, and that current trade restrictions are outdated, and that it is important to build back trust in the services economy.
I'm going to bring it back to you, because another conference that was recently held in Saudi Arabia was a conference that sought to see how Saudi Arabia and Africa can do a lot more business together in Riyadh. And I'd just like your thoughts on how we can make the situation more of a win-win, particularly when it does come to trade in services between Saudi Arabia and the rest of the African continent.
Just to start, the structural shift in the world economy that has been created by the digital transformation coupled with COVID-19 pandemic have changed the trade patterns. Consumer buyer behavior is changing. Today's generation is the click generation, the instant generation. So speed is the common language. And unfortunately, services is regulated, and as you said earlier, a lot of bureaucracy. So the supply of these services does not match the demand of the consumer buyer behavior. So we're trying to build, we think Africa, there is huge potential opportunities of Africa. As I said, Africa have focused only in 2 sectors out of 12 sectors. 65% of trade of services in Africa is only in tourism and distribution. So there is huge opportunities in the remaining 10 sectors: finance, education, health, so forth, logistics, and the list goes on. So we think, one, we can add a value by addressing and identifying what are the opportunities in Africa that could be working with the private sector, what are the opportunities that could be sought. Second, identifying and resolving all the regulatory barriers so we can make it seamless operation. And third, addressing all the challenges, because we think Africa has all the potential to grow north. And especially, there is 20% of Africa's population is facing hunger. So services will provide reduced poverty, will create jobs for women and youth, and there will be opportunity for investors to invest in and help Africa, and help together we can create the model that hopefully service-led economy can, African nation can help them to solve their problems.
In terms of your sector, sir, in financial services, perhaps you can just give us your experience of how you have experienced cross-border trade and financial services thus far, and more importantly, what you think should be done, can be done to make the process a lot more seamless.
Talking about integration of services, first, even a commodity-based country like Brazil or Argentina, Martin, soon we'll talk about that, but service became the most important part of our economy. All of any big country with a minimum level of development, service became the largest employer of the economy. And even in a commodities-based economy like Brazil, where the commodity side grows a lot, but business like finance or telecom grows a lot, and an important source of employment and wealth creation for the society. And the key reasons, you talked about integration and what else is needed, and you mentioned some of the deals or treaties that were signed, not recently, but some of them recently, some of them few decades ago, which is quite important. But beyond that, or before that, you need some macroeconomic factors to promote integration, and especially service integration, which is minimum macroeconomic equilibrium and previsibility, right? It's you should have a rule of law. You need to have levels of institutionalizations and openness to international and global investors that are quite relevant, right? You can sign any treaty that you want, but if you have too much instability and not a welcome policy of international capital and international business, it will not work. So I would say that it's important to understand in all governments this idea of previsibility and welcoming global capital. I think it's a condition for the integration, and the title here is about service. We can extend that comment to all of other parts of the economy, but I think it's crucial for that. Having said that, going to your more specific question on financial service, we are in a regulated entity industry, right? It's with, of course, different regulations. Honestly, I think we progressed a lot with the BIS rules and global accepted rules. At least in the G20, we have quite similar rules. And I do like that the markets follow these rules. And sometimes the leading markets don't follow these rules, like US. But I would say that most of the players are following these rules, and I think it's a big achievement. There is a pattern on global banking, and our sector became less globalized than 1 decade ago. It's part of the natural evolution and somehow characteristic for a heavy regulated sector. You need to have a local flavor. I don't think it's necessarily wrong, but I do like to have to see organism like BIS, the International Bank for Settlements, which is, let's call the central bank for the central banks, defining rules that helps the banking industry or the financial industry in a broader way to develop in different parts. So in Saudi or in Brazil or in Argentina or US or Switzerland. So we are following these rules, and I expect to see more from this global body that has been working. And part of that, even in an auto-regulatory way of not only central banks, but the global leading banks via the bank's global institutes. So I like what I see, I like the direction, and you need to have in a regulated industry some patterns or standards that need to be followed for all of us.
As much as regulation is important when it comes to trade, it is equally important to know where corporates are showing interest while keeping in mind the risks associated with a particular region. Inflation in some African countries has reached double digits, so it is key to circumvent these risks in order for investors to gain a return on their investment.
I think there's a great awareness amongst the governments, the politicians, and the corporates of the risks. Stability is what everybody is looking for at the moment. And there's an acceptance, whether it be the Nigerian government who's present here at the moment, the South African government, there's an acceptance that there are significant risks, and there's an onus on the governments to provide the stability, the regulation, and the liquidity. What we've seen in Nigeria since the election is a significant number of policy shifts that have made it easier and will make it easier to attract capital in and to take capital out again.
And again, circling back to your comment on the Africa Free Trade Opportunity, the Free Trade Area deal that seeks to combine the continent, boost the level of Africa trade, and ultimately growth and jobs. It's been slow so far in terms of implementation, but maybe again just to flesh out the potential opportunity that the AfCFTA could bring once it really gets up and going.
Well, the scale, it's the consumer market is the obvious attractiveness to international multinationals. However, it's also the ease, the friction. You talked about some of the risks and the barriers to trade and logistics. So removing those barriers, we've got a continent that's divided into a significant number of countries. Removing the barriers and that prevent the flow of goods and capital between those countries is a significant opportunity as well. You say it's been slow, but it was only formally came into being in 2021. And there is significant progress. His Excellency, the General Secretary, is here, has participated in a number of panels. We've had 2 presidents who've been participating in panels here. So I think it's recognized that with that greater scale and with the reduction in the friction, the trade opportunity, the movement of goods, the logistics, it's a significant opportunity.
We are embarking on a journey that doesn't just look after big business. SMEs are very much part of this of this free trade agreement. So I think that the global multinationals that are already operating on the African continent are extremely excited about it. They're very encouraging of us moving forward. A lot of them want to see harmonization of the various regulatory rules that affect their particular sectors. So there is definitely that cohort that wants to see this happen and happen quickly. For others who may be considering investing in the African continent, I don't believe that I could quote an instance where somebody says, I was going to go to Asia, but now because of your 1.2 billion people market, I'm coming to Africa. With that said, people who would have been looking at individual countries continue to do that. The interest, for example, in the DRC, as a result of their copper and critical minerals and cobalt, has not diminished. If anything, it's increasing. There's a lot of interest from the mining community in that country. I think with the new administration in Nigeria, depending what they do next, you may find Nigeria again garnering a lot more investor interest. They've had it. It didn't go away because they've been able to attract quite a bit of FDI in the last little while, but I think they're expecting more if they can stabilize the system pretty quickly. So I'm not going to say Africa stands in the best of all positions. We do have to get over the hump of the high risk on the debt side, for example. We do have to actually get a feel that we're truly post-COVID. But, you think about places like Kenya, tourism is back and back in a very big way. The East Africa community is flying again. I think they would have exited 2023 clear of 5% annual growth. So it's getting better in places. Once we get through the restructuring in Zambia, I think the story would look a hell of a lot better. Ghana following very close after that. So I don't think Africa is in a bad nick.
Look at Rwanda. It's grown in leaps and bounds, in large measure because they've reduced the impediments, the ease of doing business, and of course that then makes it easier for the informal economy to enter the economy. Importantly, why this is so important is, firstly, you need to normalize business activity, and secondly, you need to widen the tax net. The Kenyan authorities increased VAT. There was huge resistance to those changes, but Kenya is now in a position to be able to tell the world it'll pay for its bond, the bond that comes due in 2024. It'll meet its obligations as they fall due, so therefore investors must invest. In essence, you will be saying to investors the risk-adjusted return is fantastic when compared to other parts of the world.
Another key topic that was brought to light was financial inclusion. The COVID-19 pandemic revealed the unbalanced and severe financial gap between the banked and unbanked. Despite the volume of digital transformation paired with the increase in developing technologies, millions of Africans remain excluded from obtaining suitable finance or the security of finance. This brings into question how we can create an inclusive environment at a time when resilience to economic crises is dangerously low.
As regulator, promoting access and usage is one thing. It's more of a developmental side of central banking, but we have to also look at the broader picture, which is monetary stability, financial stability, and therefore making the financial system more transparent is something that is at the core of our work.
Yeah. So at 12%, you still have a lot of work to do. Do you find the political support that you require, or perhaps is that something that could be perhaps increased and help you to do more?
I think the national policy in itself is a strong political manifestation that they support this initiative. Because it's not just central bank, as I mentioned, everyone now will have a role to play in making this strategy happen. Yeah. But I think what is lacking is education and awareness. A lot of people don't understand. People don't want to buy insurance because they don't see why they have to pay money up front. Yeah. What they don't understand is that when something happens, it's going to be bad. And we're talking here about people who are not educated at all, but I mean, as a bank regulator, I can make this allusion to, when we were facing the global financial crisis and Basel III was introduced, and that means having the financial institution to increase their capital base, et cetera. Nobody wanted to do because they think it's a waste of resources. But in fact, this is a form of insurance. Yeah. So if these big financiers don't want to do that, how can you imagine and explain these poor people to go and pay upfront these insurance policies?
Absolutely. I can tell you that education from a personal experience is a vital tool. I come from the rural areas, and I remember way back in the years when I started working, suddenly I had money in my pocket that I'd never seen in my life before. Let me come to you, Munia. You saw an opportunity in financial inclusion. You need to tell us your story.
Sure. So the story starts maybe 25 years ago. I was doing an undergrad dissertation on the impact of microfinance. Later on, I moved into a full-fledged study on the impact of microfinance. And I thought it's revolutionary. I thought it's really benefiting people's lives, and people really needed this finance into their businesses to grow their businesses, employ people, address new markets. Later on, in 2010, I got the opportunity to establish a vehicle financing business. And it was a tuk-tuk business on credit. And these were revenue-generating businesses. And during the course of the following few years, we generated hundreds of thousands of jobs, because the return on equity of a tuk-tuk is maybe 100%. You can collect your money in 10 months or in 12 months. But most of the owners didn't have the money the startup capital to buy the actual rickshaw. So we provided this, and it was a very creative way because there was no microfinance law that enabled private companies to do so. Later in 2014, I established a microfinance company when the law was issued. And we started focusing on women, and it was quite innovative. We focused on group loans for women, and probably we were the largest doing so. In 2017, we founded Highland, M&T Highland, which is the company we have now, and it was basically to revolutionize access to financial services through technology. And together with my co-founder, Ahmad Mohsen, we started trying to create creative loans and creative financial solutions in general to this segment to help them. To date, we've provided financing maybe north of $3 billion. We've provided access to more than 3.5, 4 million people in Egypt. And if you think of that the unique credit card holders in Egypt are 2.5, 3 million across all banks, just gives you a bit of idea where we are. We ventured into payments. So we have a mobile wallet that has hundreds of millions of dollars throughput monthly. We launched our cards very recently, and that will be a game changer, the cards, because it will connect the customer to the application on a regular basis. And we will be able, we currently have a lot of algorithms analyzing a lot of traditional data and non-traditional data like mobile usage, social media, what they're doing, in order to create personalized advice, whether it's in budgeting, whether it's in different products. That if we see him buying a product that's gonna have a discount in 3 weeks, we'd give him an advice. This is still not live, but this is work in progress, and it's happening.
Your Majesty, I want you to weigh in on some of the issues that you raised, especially around insurance.
Yeah.
But I also wanted you to talk to your pet, because before we know it, time will have gone. We've got to talk about how you ensure financial health and whose responsibility that should be.
I think it's a very good question, and I will like to, I wouldn't say disagree, but put the focus in a different way. First of all, financial education, very important. I think that, should be embedded in school curricula. Children should know the basics of budgeting. They should know what is, credit, more or less what is an insurance. But one thing, financial education does not work. Education, does not work if you don't have the product you can actually practice it immediately. So we've actually learned that in the Netherlands. We've actually done, very good research on this. So
where do you begin, though? At what level?
You have to begin like I give my kids, pocket money.
At home.
And when one day, one of my children said, oh, well, I hid my money here and I lost it. Well, now you will learn how to hid your money better. If I go and save her, she's never going to learn. So I would like to say that financial education is definitely important, but it will not ensure your demand.
Agreed.
And it will surely not change behavior. So if we look at insurance, and basically, today I was actually having a conversation. Insurance is the most boring thing ever. I'm so sorry.
I'm an insurer, by the way.
But it doesn't get anybody excited. It's the most unsexy thing on the planet. First of all, you never want to think about anything negative happening to you in the future. You want to think the rosy-posy future you're going to have. So why should I, maybe start thinking and paying today for something that might or not happen to me in the future? Death, oh my God, God forbid. The only, even in developed economies, only the penetration of insurance is only 15%.
Sure.
And these are very highly educated people, even in Singapore. So we have to realize that the notions of how do we get this, our people resilience will not be by educating and telling the good things about insurance. It will never work. So it's about bundling. You take a credit, you also
Yeah.
have an insurance that this person would actually, be able, if something happens, she will be able to, I had a visit in Morocco, by the way, and this lady had a bakery in her house, and something happened with a gas leakage, and her apartment went into flames. But she had a insurance and a credit, so she could rebuild her apartment in 1 month. She was back in the bakery again. So it was all embedded in a credit product. Or you could actually embed it in, if you're selling a very good seed, which is actually drought resistant, and that person yielding much better yields for the crops, that if something happens, this person gets a 30% less harvest that he actually got, and therefore be able to buy that seed again. So the supply of the seed gets actually his selling of a seed every year. So it's bundling, or you make it compulsory. The issue is, how do we define and design products? And the reality is, there's been so little innovation in the last 10 to 15 years on savings, for example.
I don't know whether it's polite to disagree with the Queen, but
You can do so
I'm going to
polite.
say financial education, financial literacy is not the only way to promote access, but it is essential. And I think context matter. And the reason I say that is because in Cambodia, for instance, building the trust and confidence is very important. This is a country where we've gone through 30 years of civil war. This is the only country in modern history where monetary system or money was completely abolished in the country from 1975 to 1979, and the entire country was reduced to a barter system. Nowhere else you see that, not even in North Korea. And so overnight, people were losing their saving, right, in the bank accounts. Now, how to bring back this confidence and trust to a very traumatized people, how to encourage them to go and save money in financial institutions. Now, the next generation will also hear from their parents about, remember, I lose my money in a bank overnight. I don't want you to save in the financial system or a bank. Why don't you buy gold to save? Why don't you buy land? Why don't you do something else? So this is something that is very important to educate from a very young about the importance of saving, the importance of credit, the importance of certain things that is important for them.
Our annual meeting is also about impact, and it's also about walking the talk. And I'm really proud of what we have achieved in Davos in just a week. It is a proof that cooperation can deliver results. Now is the time, as we look a year ahead, to scale this progress. I look forward to seeing the forum continue to work with all of you on these initiatives throughout the year, so that when we meet again a year from now, we will have made measurable progress on advancing our economic, environmental, and security priorities.